Welcome back to episode number 5, where I am now 5 months into my experiment between comparing exchange-traded funds and decentralized finance / cryptocurrency. I've just made a mental note of the fact that Luna has had quite a significant pump over the past 3 or 4 days, which is quite interesting. Just getting straight into the comparison, my exchange traded funds, where I was investing into the tech savvy kind of portfolio, that's increased quite a bit over the last month or so. So it's increased from 5,100 to 5,500 Australian dollars. Looking at the crypto side of things, just to remind ourselves, I was putting it into the Polygon ecosystem, and then more recently, over the last couple of months, I changed to Fantom just because I felt that the Fantom blockchain might have had some better opportunities, which is arguable at the end result. So my previous Polygon Aave deposit was worth $1,811, and that has slightly decreased to $1,735 as a result of Bitcoin declining in price. This is partially counteracted by the fact that Ethereum has slightly increased in price, but not enough to completely account for it. Reminding ourselves that I borrowed a small portion of stable coins to then put into Curve, and you can see that the DAI balance, for example, has slightly increased over this time, representing this 4 to 10% interest rate. The value of this has increased from $249 to 266, and this is due to this increase in Curve token yield. Note that the Matic token is no longer being given out as a reward for the Curve pools, or the Curve A-Try crypto pool at least. So the summary is that the overall Polygon value for Aave and Curve has slightly decreased, but is pretty much stable. Now let's compare that to our other side of the Polygon strategy, which was the Defi liquidity pairs. The value has decreased from $1,817 to $1,736, and what I've done is I've just subtracted the Defi rewards, just because the rewards they've been good, but the overall price has declined, just because I think the team is under delivering on what they were promising. So it's now at 40 cents per token, whereas back in the day it was, $1, certainly over $1, maybe even above $2 at one point in time, but that has definitely declined since then. Moving on to the Fantom Strategy, the value was roughly similar between November and December, reminding ourselves that I had initially just put in around about $800 into the A-Try crypto pool and farming the Fantom and Curve rewards. And in the most recent episode, I had kind of switched up again and depositing a certain, 1,000 Australian dollars worth of Ethereum and Bitcoin into Geist and farming some of those rewards. I didn't take out a stablecoin loan on these just because I felt that the amount of gas in order to do that was a little bit too much to warrant it. But I will do that. I will take out a stable loan to put into a stablecoin farm during this month. Just as a bit of a summary, we're now sitting in December, so that we're 5 months in, and the exchange traded funds have returned about 11% on that period of time, whereas crypto DeFi has done 47%. So this is slightly less percentage-wise than what it was before, but this is obviously still much better than the returns you're getting from exchange traded funds. But both are better than just holding in cash, obviously. Little update now, another 1,000 Australian dollars put into the ETF, so now I'm getting to $6,456 my basis for the December month. And looking at the crypto side of things, I've just topped everything up with 1,000 Australian dollars worth. So these are the values for reference on the Polygon side and the Fantom side. So I'm actually recording this on the 5th of December, which is 4 days after these values were taken, and there's been quite a scary dump in the past 24 hours or so, but we'll see how that plays out at the start of January, which will be episode number 6. Thanks.